If you're like me, do you have a 3% interest rate on your home and maybe you want to make the next move to the home you really want to go to, but you're like, why am I going to leave a 3% interest rate to go to a 6.5% interest rate? Well, I'm going to break down the math to show you what that would actually look like on this episode of Ryan in Real Estate. All right, welcome back. Thanks again for joining us. I wanted to take a chance and do something maybe you've not done, and that is actually do some math together. And the math is, a lot of us have these phenomenal rates. Wait, before we get there, by the way, if you haven't had a chance to do so, take a minute, like this, leave a comment, subscribe to our channel if you haven't. Our goal is to provide as much value as we can by answering questions, providing value, and doing things that hopefully are gonna help bring information to you valuable to your home buying, home owning, real estate experience. All right, let's get right to it. So I'm not saying that you need to go buy your next home right now in the way the market is. For some people, that really doesn't make a lot of sense. I'm one of those people. But there's a lot of people that do want to buy, think it's the best decision for their family, think it's the best decision for them, but yet they're stuck in this 3% interest rate. And not stuck, that's actually a really good thing, and you've been able to take a great advantage, probably some low payments, low interest, and it's in the end giving you a great financial benefit long term. But say you want to make that move, and that is what's stopping you from doing it, and you're not gonna make that jump. Well, today, I'm gonna give you the actual math and break it down for you to see the difference. Because my question would be, how many of you actually sat down and done the math, talked to a loan officer to figure out, if I did want to make that move, what is that going to look like today? So if you do have that 3% interest rate and you're thinking about potentially wanting to move, wanting to purchase the next home, but those rates are holding you back, here is the math. Let's do it. Let's say, and again, I'm trying to get every scenario here, but let's just say, let's start with a $400,000 home, which is about the average price home in Texas. And then we're going to take and put 2.5% property tax. Yeah, Texas, we have higher property taxes, but we have no state income tax. Let's take that as a sample case here. What would your monthly payment look like if you put down 20% when you originally purchased the home? 20% down on a $400,000 monthly payment, as you'll see here, your monthly payment without your insurance, because that's a whole nother ball game, should be about $2,180 with that 3.5% interest rate that you have at that time. So you've got this $2,200 monthly payment, and you're like, I can never leave that. But just like anything, if you want a bigger house, you want a better experience, you want more rooms, more bedrooms, a lot, a pool, whatever it might be, and you want to go get that next house, you're like, man, rates are 6.5%. What would that even look like? So let's take the next case. Let's say you wanted to move up to maybe the next price point, which would be maybe the $600,000 home, which, mind you, is a 40% increase in the price of the home that you are currently in. If you were to buy that today, and we're not just gonna take the 20% down that you're gonna put down on that, but we're also gonna take the equity that you've been able to get into your home. And you know, the average Texan homeowner has been able to gain over 35% of equity just in the last 3 years. That doesn't even account for the amount of time maybe that you've lived in it prior to the big boom we've had since COVID. So on that $600,000 house, and we're gonna put down $275,000 because we're able to bring in all the equity that you've gained just in the last 3 to 4 years, but also the equity maybe you've gained before that for that $600,000 home. That's gonna put your payment right at $3,250. Now, you're looking at that going, man, that's $1,000 a month increase. Yes, it is at a 6.5% rate, but you're also buying a 40% more expensive home. And homes that are more expensive are gonna cost more in the end. But from standpoint of it, hey, you're really actually only going up about 25% more in your monthly payment. And then when rates drop, the great thing is, let's just say rates drop to 4.5%. Well, now you're looking at about a $2,850 a month in that monthly payment, which is only about $600 more per month. So I know the rates sound crazy, and there's maybe no reason that you would ever want to leave. And look, I'm not telling you to buy. You may be in a spot where you don't need to buy and you just need to hunker down and enjoy that 3% interest rate till life goes on. But if you are thinking about a move, I wanted to at least just break down the math, and hopefully you'll find value in understanding where you're at and what would happen. Now again, these are estimated situations, estimated math, but based on a mortgage calculator, simple mortgage calculator, this is what any impact of interest rates would do to you if you were looking to make that move. Of course, if you have any questions specifically, maybe about your home, a friend's home, however it might be, shoot me a DM, put it in the comments, and I would love to be able to answer and do the math for you in your situation. As usual, thanks again for stopping in, and we'll see you next time on Ryan in Real Estate.